Okay, hello everybody. Welcome to Korean Atlanta Mentorship. So it seems like the idea of creating a velocity banking cult has become a little bit popular in this channel. In fact, somebody wrote a couple weeks ago, "Can you please stop with this whole cult leader BS? It's just uncool and weird." And then my most liked video for that week had been, "Click here and join the velocity banking cult." And if we look in the comments, it's even funnier because people are like, yeah, I was asking like, do I listen to comments or stats? And I got five people saying stats, stats, stats. And then this one says banished a non-believer. Oh man, y'all make me laugh. I could use a good laugh like that. And here's the thing. I actually don't mind using the word cult because I just feel like in modern society, people just don't have anything to believe in, right? Like velocity banking cult. Okay, you're with a group of people who have the same belief about finances as you, right? And unlike other people who just kind of do some stupid stuff like buy real estate and regret it, and if you didn't know the statistic, 90% of people who bought homes this year regret it, you actually are practicing good financial principles every single day, which includes velocity banking. So let's go ahead and do another review. So let me go ahead and open this Excel spreadsheet. And what is velocity banking? All it is a debt payoff strategy using a line of credit as your main operating account. Now, I'm not saying I'm a cult leader, but if I were kind of like O.J. Simpson, how how he wrote that book, like, hey, if I did do it, I'm just saying if I were, this is the video that I would make, right? And I would probably make you wake up at like 12 a.m. or probably 3 a.m. or some unforsaken hour and make you repeat, my line of credit is my new main operating account. Because what do non-believers say? My checking account is my main operating account, and I need 3 to 6 months of savings. I'm just kidding. Oh, it's midnight. You know how you know this is a cult? When even the cult leader can't like stay awake at midnight. That's how you know we've all gone crazy. I'm just kidding. Okay, so let's go ahead and get started. So velocity banking is a debt payoff strategy using a line of credit as your main operating account. And if you really want to learn this, just practice the spreadsheets every single day, right? Practice, practice, practice every single day. And that's what I do pretty much. I mean, I have a good time doing it. Make about $300 to $500 a month on YouTube doing these spreadsheets, and people love watching them for whatever reason. And you can do it too. I mean, the version of I'm sorry, the web versions of Excel, Google Sheets is all free. It is all free, right? And how do you create your own velocity banking spreadsheet? All it is a budget, folks. It's a budget, okay? You have two columns. Number one is the average American, and number two is velocity banking. And what is the average American? What are we trying to show is that we pay for things from our checking account. And then once we pay things for things with our checking account, we just leave a little bit of savings for cushions and emergency, right? Whereas with velocity banking, we assume that we just have the same income and we're never going to have any savings in our bank account because all of our money is applied to debt with the help of a line of credit, okay? And so we're going to go ahead and copy these expenses, right? And in lieu of savings, we have something called cash flow, which is very similar to savings. Look at this. It's the exact same number, but what we're going to do is shuffle some debt into our line of credit. Okay, so what is a line of credit? All it is a financial tool where you could borrow money, pay it back, and use it over and over again. So a credit card is a line of credit. You got personal lines of credit, business lines of credit, home equity lines of credit. I got all of them. I got all of them, right? You see this run right here, and I've been showing the same lines of credit in pretty much every single video. 280,000. So it's like a giant $280,000 credit card based on the value of your home. That's what a home equity line of credit is. And you know what the cool thing about a personal and home equity line of credit is? The really cool thing, okay? So let me go show you here. So with the credit card, if I have a $350 payment due, I can't borrow $350 from the credit card to pay it back, to pay the credit card bill and put it back, right? But if I have a $350 bill and a home equity line of credit, I could just take out 350 and then put it back, payment satisfied. That's the most mind-blowing thing that I honestly didn't think it was like, it's like one of those things like, is this even legal? And it turns out it's totally legal. And the bank lets you do this with the home equity or personal line of credit, but because a credit card is a different product, they just don't let you do it, right? And I'm pretty sure one of the reasons why they don't let you do it is because related to probably rewards points and the fact that they don't charge interest until 1 month after the statement date, right? Whereas if you pull out money from a line of credit, as soon as you pull out money from it, then you get charged interest, okay? So let's go ahead and do this. Let's go ahead and move these credit cards into the line of credit. So again, realistically, would you have a line of credit that starts at zero? Probably not. But here's the main important lesson. If you did have a line of credit, this would be a savior to you, right? And how do we get lines of credit? Well, here's the secret rule with banks. Okay, secret rule. Banks don't lend money to people who need it. That's a 3 a.m. Mantra that you could probably repeat when you wake up at that unforsaken hour. That banks don't lend money to people who need it. And why is it that they don't lend money to people who need it? Is because people who need money are a giant risk, right? That's that big R word, risk. It's why, you know, the two tallest, I'm sorry, the two types of companies with the tallest buildings in every downtown is insurance and banks, right? Life insurance companies and banks. And they're masters at evaluating risk. And the biggest risk to a bank is lending money to people who need it. Because have you ever lent money to one of your friends and your friends was like, "Oh my goodness, please lend me $2,000. I really need the money," and then they never paid you back? That's because banking as an institution knows those people are not going to pay you back, which is why they don't lend money to people who need it. So you need to get it before you need it, right? Those people are not a risk. And then the bank hopes, okay? This is what the bank hopes, that you are pretty good, you make pretty good money, but you're pretty dumb at managing it, right? That's the eventual goal. So once you have enough debt, that's when they lower your credit score and they say, okay, we're not lending money to this person anymore. They have some money, they got enough debt, but we ain't lending to them anymore. Okay, what is the equivalent of that in other industries? Well, basically, it's like in the pharmaceutical industry, they don't want to sell people pills to people who are super healthy, like, oh man, I go to Whole Foods every single day. That's like the equivalent of someone who pays off their debt super quickly. That the pharmaceutical companies and banks don't want that. Just like someone who, they see like, oh, you're gonna actually die tomorrow, right? Do you think a pharmaceutical company actually wants to sell pills to somebody who's gonna die tomorrow? No, just like banks don't want to sell to poor people. They don't want to deal with poor people. That's where the check cashing places are for. That's like a myth, like people, banking takes advantage of poor people. Not really. They don't even want to deal with them because they see them as a big risk. The people that they want to deal with are people who make money but are kind of bad at managing it. So what is the pharmaceutical industry equivalent of that? People who are healthy but they're pretty stupid with managing their health. And that's why they target children. You ever notice that a lot of pharmaceutical companies like target children? It's because they're relatively healthy. They can give them a pill for the rest of their life. It's like a market or demographic that they know will like be dependent on their whatever they're offering, right? Like you don't want someone who's going to die tomorrow. That's a bad consumer. I know I'm going about this, but a lot of people don't understand when they should get the line of credit, and the line of credit is gotten before you need it. Banks don't lend money to people who need it, right? We have to understand the demographic. So if you come to this channel and write a comment, well, how do I get a line of credit now? I'm just saying that the whole point of this exercise is to actually prevent you from even getting to this place where you got all this debt and such little savings left over. That's really the moral of the story. Don't ever get here. You know what I mean? And people don't listen because, like I said before, they want to crash the car and then tell themselves, "Oh man, I should learn how to drive." That's how they treat their finances. I see it every single day. And this is why people want to join the cult because they're surrounded by people like they're struggling with their finances and they're surrounded by people who don't want to learn how to drive until they crash the car, right? All right, so back to my point. So let's go ahead and move these two credit cards, $30,000. $30,000. Okay, and we're just doing a simple balance transfer. And when we do that balance transfer, guess what happens to these two payments? Oh my goodness, they go to zero. So now we increased our cash flow literally by $1,000 in one swoop, right? And then the final step is we put our entire paycheck into that line of credit, and then we take our expenses out, and then after every single month, the balance goes down by the cash flow. Okay, so let's go ahead and calculate that. So I2 plus 1, and then G2 plus H2 minus one our cash flow, which is 1676.4. And then what we're going to do here is we're going to take the average daily balance for the interest. But don't worry, they multiply it by 0.085, right, which is the interest rate right here, okay? And you might be like, 2 grand of interest, but don't worry, they divide it by 12 because they calculate it monthly. So it's not that much interest, okay? And let's go ahead and do this, and then we just copy these formulas, and then we see like how easy it is to pay off debt. And now in 20 months, which is less than 2 years, not bad, we paid off that debt. That was pretty easy. Okay. Okay, that was pretty easy. So now it's 20 months for so less than 2 years to pay off 30K, right? Okay, so now we got the auto loan. So what we're gonna do is figure out, okay, what what's the balance of the auto loan after 20 months? Let's figure that out. Okay, so luckily I have this loan calculator right here where all you got to do is just put these three factors, which is the original balance, the interest rate, and the loan term. It spits out a payment amount and the current balance. Whoopsie. Okay, so now what we got to do is put the current month. Okay, so what's the current month? 20 months. So let me go ahead and do that, 2020. And then, so as you can see right here, the current balance of this auto loan is about 16 grand and 241,000. Now let's take a look at this cash flow index, okay? So what does this mean? Basically, it tells you which debt to pay off first, and the lower the number, that's the one you pay off. And so you just Google it, right? And anything lower than 50 is a good candidate for paying it off. And so if I pay the 16 grand, I get about $469. But if I pay off this 241 grand, 241 grand, I pay about 1,000. So like, which one gives you more bang for your buck? It's this 16 grand. Okay, so let's go ahead and do that and move that 16 grand into that line of credit to pay off the auto loan. Okay, let's go ahead and do that. And I'm going to do plus 16847.13. All right, and by doing that, guess what? We increase our cash flow by about $469, and now our cash flow is over $2,000. That's pretty sweet, right? Pretty sweet. So let's go ahead and do that. And now I am going to copy this, and it's going to be minus 2145.99, right? And we should be good to go. And let's figure out how long it takes to pay off this auto loan. So in 28 months, pretty cool. 28 months, we got it all paid off, buddy. All right, so I think that's from a TV show I never actually watched. So 30 plus 24 is 54K. Okay. And now is the mortgage, right? So let's figure out after 28 months what the mortgage is. So this is 28 months. Now it's 237. And we have two choices into paying off our mortgage. So we have the default option, which is just to overpay our loan. So we make the monthly mortgage payment. On top of that, we directly overpay our loan from our savings or checking. And that's the default. But guess what? Most people will never, ever, 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 ever do that, because if they did, the average payoff time for a loan would be about 7 to 10 years. So, as an alternative, you can use your line of credit, right? Move some of the principal into the line of credit and put your entire paycheck, take out your expenses, and so you can have your cash flow pay down the loan and do it in an indirect way. Now you might say, why would I do it in an indirect way? It's because if you put your money in directly, you can never take it out. And then if you use your lines of credit as a backup, then you're being involved in something called income segregation. And income segregation is very, 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 very bad. And that's why most people get so confused about their finances. Because if you're splitting your payments up in several different ways, eventually that will catch up to you, right? You want to make it so easy on yourself that you don't even think about it. And that's kind of like the beauty of the strategy. I remember when I was at that point with this first year of my mortgage, all I did was, let's say, a $7,000 quote chunk, meaning I chopped my loan into $7,000 pieces or moved $7,000 to the line of credit, and then eventually, within the year, I paid off $58,000 of a mortgage, and I didn't even think about it. Right? Isn't thinking about the hardest part? And this is why most budgeting fails. This is why most budgeting fails. Because most people think way too hard, and when you have elaborate plans, kind of like the government 5 year plans. I don't know if you've ever seen any government plans where they got 100-page book, and then like 10 years later, they always do a look back study about like, hey, look at this government plan that we masterfully crafted and was 100 pages, and then we spent like $10 billion and we didn't accomplish our goals, right? That's what happens when you make things too complicated. So back to my point. So let's do this. Let's do about $5,500 chunks, okay? And luckily, right, we have a velocity banking calculator to help us determine the payoff of the of doing the chunks. So give me one moment to open it up. All right, there we go. Velocity banking calculator provided by Renatus. And you might be thinking, what is Renatus? Well, believe it or not, this cult, or AKA YouTube channel, is a sales funnel for an educational program that I do resell, where I originally learned velocity banking from. So if you're interested in learning about financial literacy and real estate investing education that will last you a lifetime, click the Google form link below. And if you do register, you do get access to this calculator. So you just got to plug in the numbers, your chunk amount, and the most important thing is actually this cash flow, right? Not the chunk amount. In fact, the more that you chunk, so let's say we put the entire balance of the line of credit here, look what happens. Holy balls. That's my new catchphrase. I probably need to change it though. I saved only $8,000 of interest, even though even though I saved a lot of time. And you have to think of this from the lender's perspective. If you thought that you were going to get $112,000 over 30 years, but you're actually going to get, almost the same amount, but $8,000 less in 8.9 years, wouldn't you take it? That's really what the lender is thinking if you replace your mortgage with a line of credit. But if I do small chunks, whether it's 10,000 or 5,000, so 27 grand, 7 years, I'll do 5,500, right? 5,500. It should be a little bit lower. This is going to be 26 grand, 7 years. So when we go into smaller chunks, you see that like the interest doesn't really change. And you know what's really crazy? So even if I have a 30% credit card, so you see that's 31 grand in 7 years. If I replace my loan with the line of credit, okay? So let's go back 8.5, right? So 31 grand, 30% credit card. This does not beat a 30% credit card. That's so crazy. So people are like, oh, so obsessed with the interest rate, and they don't know what they're talking about. There's all these nuances here. Actually learned this from Renatus, believe it or not. All these little nuances. But whatever. So let me go back and we'll just do $5,500 chunks. And you see it takes 7 years, which is not bad. I mean, look at all the interest that we paid, only 26 grand. That's really good. That's really good. I got to teach people, like, hey, don't worry about the interest rate as long as you have the cash flow. But everybody's so worried about the interest rate. And the sad part is our society actually brainwashes people to pay more and think that's better, like a higher purchase price, as long as they get a low interest rate. Because the psychology of someone who gets a low interest rate is they think they're ripping off the bank, when in reality, they're getting ripped off by high purchase prices. Okay? So let's go ahead and do this. So 28 divided by 12 plus 7. How many years is that? 9.33 years. Okay, so 9.33 years and I think it'll be 304K, right? So 250, yeah, 304K. And we're debt free. Under 10 years, folks. Mortgage, auto, credit cards, 10 years. And now we got that extreme. Well, I don't even know if that's extreme. You know what's the crazy thing about the velocity banking calculator? Every time I have it open, the calculations here are so slow, and I got a supercomputer too. So I feel like all these threads that are going in the behind the scenes is affecting this calculator. But yeah, well, that's it for today. This is Korean Atlanta Mentorship Midnight Study Cult slash group. I may be a cult leader, like kind of like O.J. Simpson may have done it, but I probably am not. But you know what? It's not. A lot of people are like, it's not a bad thing. It's not a bad thing that this is a CULT. In fact, I really got to find the post of someone. Actually, let me see this. Give me one moment to open this up. And okay, I think I got it. Give me one moment. Sorry. All right. Do I have it? Yeah. So here, there's a post that's so sick and tired of outsiders coming in and disrespecting the cult. And then someone wrote, in this case, cult is a good word to learn and be debt free and positive cash flow. Yeah, it is. I mean, listen, I kind of wish I knew like these things when I was like 18, 19, but nobody taught me. And every time I try to teach 18, 19-year-olds this, they don't really seem to care. But it's much easier to teach their parents than it is them. And I think their parents kind of get sad because of that. You know, like it's so weird to me because like when I was a younger man, I felt like nobody older ever listened to me. And now that I'm a little bit older, I feel like the people who were like my teacher's age when I was a young kid are the only ones who listen to me now. I don't know what it is, but like people young like, and if you look at the channel statistics, let me actually see if I can find it somewhere. If you look at the channel statistics, right here and right here, and then viewer age, okay, in last 28 days, you see that 18 to 24 nobody watches. It's kind of weird how that works. And people who were essentially like my teacher's age when I was a kid, those are the only ones watching, and I had no idea that I would actually have influence on that generation. Like I had no clue. It's weird how you surprise yourself like every stage of your life, right? Because I literally had no clue. Okay, well that's it for today for the Velocity Banking Midnight Study Group cult. So if you have any questions, leave them down below. I may or may not answer them. I tend to not to answer the gimme advice, and it's like super, you know, vague, and it's like I'm telling you like one piece of my personal situation, and you gotta like fill in all the blanks. Like, no thanks, no thanks. It's midnight. I'm really sleepy. But have a great night, everybody, and we will keep continuing our study probably by tomorrow if your cult leader isn't so lazy. All right, have a good night.